We're nearing the 15-minute mark of the Thursday trading session. Let's get another check of the markets. Last night's results from chip giant Nvidia bringing investors back to tech. Of course, that won't change the equation for some, which is that there's so much money in a handful of tech stocks. And if we were to see more market swings ahead, that could prompt some portfolio worries. Let's bring in our go-to market volatility watcher, Wu Silverman. She's head of derivative strategy at RBC Capital Markets to make sense of it. Amy, what's been the buzz? Why don't you take us through what has been the buzz for the last 24 hours? It's very rare to see almost like a Super Bowl conversation ahead of an earnings report, but it felt like that was the case with Nvidia yesterday.
It really did, John. And there was certainly a lot of hand-wringing about what earnings would bring. It looked like we have more right tail to focus on right now. But I would tell you, when we speak with investors, this cycle of FOMO, this cycle of momentum begets more momentum, it just hasn't gone away. And you really see that reflected in the options market, because the options market tends to be your leading sentiment indicator of when we get that exuberance. And I think the Nvidia earnings last night is still telling you there's still steam in that engine.
Can you elaborate a little bit on that? Because I think, the simple question people have is, the stocks have gone up a lot. How can they keep going up, or I'm uncomfortable with them going up? So what is the positioning in the market among the derivatives folks on what they think happens from here?
Yeah, it's a great question. And I'll tell you, I'll probably have a clearer answer at 4:30 today rather than, nearer to the open. But leading into Nvidia earnings, we really saw historic levels of call buying. And this was actually very similar to what we saw May of last year, if you recall, when Nvidia was up 24% on earnings. And one thing we've really sliced and diced is the post-COVID era, John, is sort of its own regime relative to other regimes, where this idea of the right tail, so that upside being a concern for investors because they're relatively underinvested, continues to be the theme. So we really saw historic levels of call buying, and that can perpetuate further upside because of what dealers have to do on the other side, because of what positive momentum begets. And one thing we've said to clients is, look, when you see these cycles begin to start where the call demand outweighs the put demand, it usually means it lasts for a little while. And I think we are seeing that still for Nvidia and other Mag 7 names.
Okay, well, you mentioned history. Over the years that I've been covering the Canadian market, there has been an interesting trend with some players on on Wall Street that have looked at the Canadian housing market and scratched their heads, and in some cases have gone in to try to short Canada housing. Interestingly, that is a theme you are monitoring once again. How come?
Yeah, it really is the case that I would say at least 3 times a year we'll have to do a Canadian housing call to walk through the structural differences between mortgages in Canada and mortgages in the U.S. And, frankly, there are large differences in terms of, one being fixed rate, one being more adjustable rate, the tenor of the mortgages. And the simple thesis is that there continues to be concern around Canadian housing and whether or not that will break. And the second element of that is there tends to be this volatility difference. So it tends to be relatively more inexpensive to hedge Canada than it is to hedge the United States. So one simple thing we've said to clients is, if you're overall concerned about the market, frankly, it doesn't seem like many people are, but if you are overall concerned about the market, use Canada as a vehicle. So use an XIU or a ZEB as a proxy rather than US ETFs, because that simple options price is just cheaper. And then you obviously could potentially have a kicker of some sort of housing situation.
Those ETFs, what are those, for those who aren't familiar with the codes there, what do those ETFs represent?
So XIU is just a broader Canadian ETF that represents TSX stocks, and then ZEB is specifically the banks, which are a proxy for the housing. And in the United States, the proxies would be XHB, the home builders ETF, but that would be United States only.